Hi, Julie. How are you doing? Just a shame about the Scots. I didn't get to see the game. Did they actually have a shot or not? So busy. So sorry, a little bit later today, and I was a bit behind on the preview for my. So I've been flying through. Haven't really managed to look at the markets much today either. So very happy for anybody to throw things in reverse and tell me what's going on. That'd be really good. Ah, the terrible twins. Brilliant. Good to see you. Hi, Vivi. So, as far as I can see it, the week's going to be dominated by politics and rates, um, inflation chatter. The Doctor Doom at UBS is all over that today. Paul Donovan, he's a fantastic economist, strategist, normally right on point, and he's talking about how annoying it is with politics in the way we don't like. None of us like it in the markets, and inflation just becomes an emotional tool rather than people looking at it rationally. So we need to keep eyes front, look at the data, and there's a real sense. Remember when I first set up the Talking Heads Fire Brigade with the and you'll get those gifs and memes with me doing the shapes to the hip hop thing. And that was when the height of frustration was there in the first quarter from the Talking Heads, and we're back at that point. Everyone's just exasperated. The French ooh la la with what the hell? It's the same thing on repeat, and unfortunately, I don't see them changing very much. This will be interesting though. PCE and the PCE deflators with the quarterly look are both expected to be quite calm this week. We'll have a look at them closer to time on what the actual consensus looks like. But again, they should be in line and maybe beat. We saw that the PPI feeds to PCE were low, and they tend to stay the same. They come through nicely. We don't normally get shocks through PC. That's why the Fed chose it, because it seems to be longer time frames for things to unwind. So it's all setting up for a little bit of nervousness, unwinding some of these tech overboughts, some of the crazy flows from Friday's triple witching, and we'll see how that all plans out today, because it was basically Nvidia in versus Apple weight being lowered in the XLK tech index, which saw Apple lose quite a bit of weighting in that index. So that was causing a lot of confusion as to what the true flows were, but massive, massive flows. A lot of debate as to whether that blip up of 9 billion inflows into tech last week was to do with that more than genuine new flows into space. CFTC data, any of you that do follow that, was delayed last week because of the June holiday. Excuse me. So look out for those that are coming out tonight to see any major changes. And we'll have a little chat about politics in a minute. And that obviously is left, right, and centre. We've got France have their starter on Sunday. The UK full on next Thursday. This Thursday, we've got Trump Biden's first live political debate. So we're going to have, unfortunately, a lot of headlines in the way. The real data doesn't really happen until Thursday, Friday. Outside that, it's a bit of Japanese data, and Japan have got some peripheral CPI data and their Tokyo CPI. So anyone that's been watching UJ overnight, we've hit that the intervention level again. It did have a little bounce off it as people started chattering, but unless something concrete comes out, or if any weekly or dovish data comes out during the week from Japan, then 160 will be really pressured, and we'll look at that on the chart. It's really looking like it's going to eventually flip flop and go to the upside on that. Hi VJ. Yeah, just funny enough, just talking about Japanese yen. We'll go into that in a few minutes. But I do think they're going to really struggle to do anything. There's a bit of short-term dollar strength around as well to finish off. So the net, we've got a big week. Possibly has a rally towards the end of the week, which might coincide with a yen intervention. If you get really weak, benign PCE data, and they have shown already that they're willing to take on the dollar with intervention on the right days. They're not just blindly throwing it away. My concern is if the market keeps pushing at it, they'll do their intervention by selling the US Treasuries, which will cause us all sorts of other different problems, and then we might go into a deeper correction in a lot of things. Um, Julie, the game wasn't great. We played better, should have won, but didn't go. Well, that sounds like that's the DNA of Scotland, isn't it? Yeah, unbelievable. It's a shame England have sneaked through to the semis of the T20. It's all coming good. Haven't heard from the South Africans. I don't know where they've disappeared to on the chat. By now, they'd normally be talking to us as if they'd engraved their names on the trophy. But it's a shame. I'm sure they'll come back. So anything that anyone wants to particularly talk about? Yeah, India versus England, if you manage to get through. Um, yeah, you should be all right, shouldn't you? It's Australia that's got the problem. Great result for Afghanistan. Fantastic to see. And it wasn't Rashid Khan, which is an amazement. Only got 1 wicket. Adil Rashid, he's doing the business for England. He could be the key. Um, so without further ado, what should we talk about? Unwinding. So yeah, just as we talked about on Friday, we just need to keep an eye on what happens into quarter end here in the indices because the volumes overall, apart from triple witching and like you said, the XLK reweight have all been dwindling. So it's running on fumes still. It looks very much like we're either close to little short-term consolidations or they're about to go in them. Don't think this is a major one yet. As we've talked about before, I think we've still got to put in a material high, which may start into that may even come starting at the end of the week if everything sits nicely. I've not managed to find anything. I haven't really had much chance to look to see if there's anything changed in the setup for settlement, but we'll take it as though everything's still the same. So looking for if we're gonna put in this low for the move, it's probably gonna have to happen early this week. That may coincide with a bit of dollar weakness and political to and froing. A little bit of an attack, perhaps again. We talked about it, the paper sellers trying to force out the physical. Maybe we get that cathartic sell-off, and then perhaps flows take over on the physical side. So both are still in play, and until we take out the recent lows of the move, the one that could be the actual C leg, that's 78.6, then until that is taken out, then we're still in a effective nesting to the upside. That is I think it'll be a volatile week as a result. Everyone's struggling. They're coming out with some good ideas on my chat. I encourage everyone to have a look at that. There's some clever stuff being suggested, but it is a tricky market at the moment. So, yes, so back on the US thing. So the other thing that's coming out this week is housing. We had a brief chat about that. A couple of people on late last week on my chat. Basically, as you can see, the construction side of it, the new permits, new housing starts are all cratering a little bit, which is a leading indicator and is never a good sign. House price indexes are more or less holding up, and we're potentially on the verge of worrying trend, and that is if the supply of houses starts falling or the rate of growth keeps falling back, then you'll start to get a squeeze on the actual house prices. Now, remember, we haven't quite put in the lows on CPI yet. We haven't had the rental decreases come through. They should come through, but it may be short-lived because what happens is the OER, the owner's equivalent rent part of CPI, is estimated off the back of the house price index and the average level of house prices. So if that starts going back up, then obviously the imputed rents will be higher. And outside negotiation periods, then you're stuck with whatever they create from the formula until it's shown not to be the case. We still haven't seen those contracts from 6 to 8 months ago come through yet. That could be the thing that breaks CPI in the 1 or 2 months ahead, just as everyone's given up on it. But like I say, just watch out for those trends. The housing data, having been ignored for a few years, is suddenly on the cusp of being important again. But the big thing has been Europe, really, hasn't it? The whole Macron debacle, French oats, what they call the French bonds, and German bunds. The spread between those, and you can set that up on TradingView or whatever you're looking at, And I like to do those sort of things just to prove that you don't need Bloomberg all the time. So French 10-year oats versus German 10 years have blipped up to, um, their highest since 2012, really, and as we'll show in a minute, in fact, I'll go into that. So French oats minus German, when you get periods of, fright, the German bund is a little bit like the long bonds. People go to it as a flight of safety. Within Europe, Germany is always the most sensible and the powerhouse, but also most inflation scared, so you tend to hide away in bonds there for safety purposes. This blip over here is COVID. That is when everybody dived into safe havens in the initial spurt in March 20. But look, we're actually ahead of that. So people are quite worried. That spread hasn't been as wide as that, and it's not been as wide as that since 2012, going all the way back. You can see you've got this little blip up here, and it doesn't really land until you're over here, which is sort of coming out of the post-crisis. We just had, the worries about the euro blowing up here before. Who was it? Trichet, I think it was, wasn't it? When was the man there for the all-in? I can't quite remember. Was it the Italian chappie? Can't remember. Either way, that's the last time that we were really seeing a lot of angst. So really, it really has got to the heart of the investment community. The CAC has dropped 220 billion market cap, which has put it below the FTSE. It's amazing what can happen. And then I saw a very interesting article about how things might develop, and we might be stuck with some of this volatility for a while in the euro. Might carry on crunching sideways to small down, just on the fact that obviously the French do it in a sort of two-tiered way. There's a first vote, a bit like the prime ministerial elections with the Tory party. They have a number of rounds, and when this first one goes, you have to have 12.5% vote. So any of the sort of peripheral centre niche groups will all fail, and then you're left with Macron's bunch just about qualifying 8%, but mainly it's going to be the left parties and the rally, the far right people, Le Pen's. Well, at the moment, Le Pen's group are on 34% of the vote. So obviously that is the highest vote, but not necessarily a majority to be able to govern. As people drop out of the first round, then they'll align alongside other people. So you'd expect both main sides to progress. But then you've got a situation where there's still a lot of people who will do anything not to have Le Pen in charge of France. So we might end up with a really unpalatable mix whereby a high percentage of the population in the mid-40s, perhaps 40%, vote for the far right, but they've actually said they won't have a coalition with anybody. So that means that if they don't have an outright majority, they might not make government, in which case all the others can club together and be in charge. And that would be a classic French fudge. And then we're left with probably quite angsty situation where there may even be some serious riots on the street, supercharged French riots, even by their own historical standards, which will obviously put us into a safety off mode again, and all sorts of worries about what's going to happen to the euro. So I'd expect that could change the pattern of things if we go down that line, because a strong far left coalition isn't necessarily that good for the euro either. So look out for this. Might not be as clear cut and nice as everyone thinks it is, and may drag on and might even end up with new votes or anything down the line. So it's not necessarily going to calm down. This thing could still escalate. So the DAX obviously has been hit a little bit by that, but not as much as the others. So if you're able to play, you would do with Europe. If you were stuck in Europe, DAX over everything, but will get caught up in the downside. Um, so I said politics. We've got the UK as well. Again, they were all trying to attack Farage at the weekend on his commentary about the Ukraine, which I think I sort of feel for what he's saying there because just like he was in Europe, he was like a canary in the mine, warning of how people's attitudes were changing, and there's a lot of sensible people out there across the globe saying the same thing, that the expansion of NATO, et cetera, has antagonized the the poke the Russian bear. It's not right in any way what he's done, and it does need sorting out, but it looks like it's gonna end up having to be some kind of political appeasement from both sides in the whole Ukraine situation. So trying to use that as a political weapon in this UK general election is a little bit out of touch, I think, really, because he's only sat there just like he was on top of the whole European Union thing and predicted how the Brexit vote would come through. It's pretty, the guy might not be everyone's taste and a palatable politician, but he actually is good at catching trends. What he's not good at is catching opinion polls around the time of the Brexit vote. I'd backed a double, well, two singles of Trump getting in, and then also the Brexit being a winner. And then he came out on the eve, on the first exit poll where it suggested that Remain had won and conceded. Luckily, I managed to knock out my position to just about break even, and then to sit crying into my cornflakes as Brexit won, and that actually cost me a lot of potential winnings. So gutted, absolutely gutted on that. But that's by the by. The key thing is ready to react and cut when you think you've got the right information. So again, we've only got a week. I imagine that it's going to get quite dirty. One of the main points being that the Labour manifesto doesn't. I don't think it readily admits they're going to try and take it straight back into closer ties with Europe. And I think that the Tories will start playing dirty over the week, trying to hurt them on that. It will be obviously they're anticipating Labour having such a big majority. They don't really have to worry about anything contentious until they're in power because they'll be able to vote it through House of Commons, whatever. So it'll be interesting to see how people vote because I'm not quite sure the country are angry with the Tories. I don't think they're necessarily wanting to give Labour a massive majority either. So the wide polls might actually end up being a lot closer as a result. Well, a lot of people historically say that they're not voting Conservative, et cetera, in certain areas of the country when they actually end up doing. But, you know, not in any way the Tories are gonna get in. It's gonna be blown apart by the reform. It'll just be a case of making sure that no one's got anything looking like too big a majority. We all say we don't want uncertainty, but we also don't want anybody that can massively rock the boat in markets. Whether Labour have got it in them to be sensible. They've talked a good talk so far, that's another matter. So net-net, all of that means Europe and the UK likely to have a little bit of wobbling. At the moment, sterling is showing signs of potentially being a bit of a safe haven relative in Europe, so we'll see whether that continues. Will the news flow improve for Europe as we go into the first round? Every chance, because, it's such a dire potential outcome. You'd like to think that people could start suggesting some good solutions. So no breakout yet, but as we get through the next couple of weeks, with the hope that the euro starts bottoming. It's all about what happens in the US. Is there anything that can change that rate narrative for the dollar? Hello, Bletchley. Nice to see you. So anybody got any questions on that so far, the sort of political angle on markets? Both Biden and Trump are gonna come across really nationalistic in their policies. It's interesting today that China and the EU are trying to have a get together about tariffs, see whether anything comes of that, but the EU won't be in a strong position in that at all. Hello, Pavarid Janthorn, is it? Janthorn? So, I said gold, unless anyone else has heard anything. I've not really had a chance to scour around today, but I Still think there's gonna be that. Okay, Pav, thank you, mate. The, still think there is the setup for a lot of volatility this week and a squeeze if we can't find some sellers. If PCE comes in benign as we think, then that is gonna be the real driver for the rate unwind again and real rates, et cetera, et cetera. There's another kicker. So you could have a double whammy into the end of the week. Got month end, June end, settlement end, potential PCE support. I think we need to get a lot of the negativity and potential chart bottoming out of the way earlier in the week. So yeah, I've thought for a long time the euro is still set to break out and go up to sort of 110 area at some point. Still in a kind of consolidation move, even despite all this nonsense that's going around, it's still consolidating earlier moves up. Um, and yeah, sterling has been trading like a US proxy for a lot of the year, and that could start unwinding quite easily. Um, as I said previously, a lot of the underlying data has blown up. It's only the wage data not slowing quick enough, and the inflation data is slowing, but not as quick as a couple of core forecasts of the service index side of things is remaining sticky. But it wouldn't take a lot again there to just push them from uh, being unchanged to moving. I showed it doesn't take a lot of movement from the participants, and it needs two to move because I think Bailey will come off the fence once it becomes a draw. So then you need two people to move. So we've got the new girl who's taken over from Broadbent, and she's in charge of monetary policy, so and supposedly implementing all the ideas of Ben Bernanke's review. So that will be interesting. He may suggest that they start becoming a little more um, hands-on because these tools are quite blunt when you're just doing interest rates. They openly take 1 or 2 years. If you're seeing cracks in the data now, why is it all of a sudden you're going to have? You may obviously have an uplift short term in market sentiment, but it takes time to move through its transmission mechanism through the economy. They all forget that nice and conveniently. And it's almost they start thinking that rate cuts are an instant inflation boost. Well, I don't think it will be. And it'll be the case of a lot of companies sort of rebuilding their margins a little bit rather than necessarily cutting prices straight off or banging them up. So will the Labour government have an impact on the pound, Ben A? Like I say, at the moment, it seems to be there's two factors. One is that they've talked a rather sensible game in the main, and that at the moment it looks like they are going to win. So there's a sort of pseudo certain outcome. What I've said is I think that lead may well halve when push comes to shove, which potentially will be sterling positive, I think, because it will probably stop them doing the worst of things. And something I'm sure I mentioned it on here. You've got the French left and right. You've got Trump. You had Liz Truss all pushing for growth push environments. Obviously, she had a crazy chancellor that threw everything in there, so lost credibility. But Liz Truss gets accused of being this super radical. All she was trying to do was supply side reform and throwing in some incentives, growth side, etc., etc. And unfortunately, if the market said that was uncosted, wait until they see what Labour are proposing and far right and far left in France, which already is one of the main reasons that the bond market is cratering because they're supposed to be reining their spending in, and it looks like it's about to go uncontrollably the wrong way. So yes, dependent on how Labour's language changes and Rachel Reeves, etc., as to how they're going to fund things, then sterling should be okay, unless that starts really looking like they're going to start releasing the gift and spending like crazy. So yeah, once the euro has any excuse to have a sensible rally, I wouldn't rule out that path. They sort of 107.5, 108 region. We'll have a look at that in a minute. US GDP could be a seek and destroy day. What are you thinking there? So yeah, so back on onto gold. Hope that's it could be, yeah. I mean, I think it all depends what happens in the. I mean, it looks quite dull so far this week, doesn't it? But looking at some of the chart setups, we could well be sweeping down on the lows and ripping a few things out. GDP, if the subcomponents come in okay, then yeah, I think it could be rally time again. So again, we'll look at this on the chart, so I can go in a little bit deeper, but the bit in the weekly, so that June the 7th low on gold, that's the one that needs taking out, 22.87-ish. If not, we're still in, even though it looks impulsive and relative to the 3 swings down, we had a 5 down. It should be a zigzag. We've had what looks like a 3 swing move. It got quite complicated, and then we had a 5 waves down. That is a classic zigzag into that. If it's not, if that's just the first leg, we're looking for 5 down, of which this complicated sideways would be a 2, and we're in the 3rd wave down, which is as we know, often the most powerful, so it could be a quick move down to break that low. We'd need to have a small bounce and then a final 5th wave, which would then put us in a valid area for that whole wave 4 again to be finished. But we want all that to happen into these data points, I think. So who knows? Because like I said, this could easily from here, it could easily squeeze up. We are until these lows are taken out, then it is a valid structure that even though that looks sideways and not impulsive, I said that could easily because it's remember when you've got the 5 waves overlapping, that is a leading diagonal because it's in the position of a wave 1. All this here could just end up being the lower degree wave 1. I did mention that I thought I was a little bit ahead of myself potentially on the labeling because we need to do a lot unless we get a massive couple of wave 3s at a sub-level, then I might have gone a little bit early. That might need redoing. But either way, there are 5 waves in place, and we've started selling off. So we're at least consolidating that. For that to be valid, we need it to hold the current low for the structure. So that's we're mid-tier, and I can see why everyone's confused and I've got different ideas, but, look at it at the moment, just look at the moment, it's trying to break out, isn't it? And if it really is in this physical deficit, then they're gonna struggle to knock that down with paper trading on gold. Let's just dip into that. So that's my chart. You're probably a little bit bigger looking at it like that, but, it's a general setup. But at the short in the short time frame, we've had a one up that held. This is now all about whether it's a 3, 5 overlapping structure. Is that leading diagonal, or is it still tracing it? Is it more the fact that that's a 1, 3, could be a set of 5, 3 waves, in which case it's still grinding up to put in a higher high. Some people were looking for that 2340 level before it reversed. So we may be in a state of a bunch of 5, 3 waves up to put in the one high before we properly consolidate or we start the sell-off. It's all still open. It's difficult to call at the moment, and I'm only gonna play it and make a call every time it's near an extreme. So 23.50.79, that's that sort of gap area over here, isn't it? In the middle of a big sell-off trade. In what context are you looking at 23.50.79? So I can see why people are in here at the sort of 40 region. So retracement of this sell-off, the first sell-off wave. Yeah, I mean, if that is a 1 down and we're doing a 2, then that is a natural ending point. So it could be. It's just all about it doesn't have to go to those levels, does it? And there's obviously, um, there's a lot of quite gappy blocks in there that's gotta come overcome, see whether they're really there, but it could do, yeah. Spot 6 for a wave, I mean, if it is a valid wave too, it can go all the way up to 99.99% of that move, which would really confuse the hell out of us. We had that a couple of weeks ago where the retracement was almost 100%. Just to throw us into mix, you feel like the previous trend is reestablished. We'll be thinking that we're really in breakout world, and then be crestfallen as it comes straight back down again. I don't rule out the volatility this week testing a lot of the setups both ways. Ultimate volatility, talking about what we're talking about really there, 100 range. We've had it before. We've seen it on a couple of days. It's not out of question, and I think we could really flip-flop between those 2 and get in the positions both ways. So you're just gonna have to time your entries and be nimble, I think, you're playing gold this week. Like I said, huge flows in the US indices, triple witching, it looked out of line because volume into these tops has been quite shallow relative to the moves in the wave. A lot of the other wave threes we had on the way up. We showed on Friday how that was happening. We had stronger momentum, stronger MACDs lower down than we've got here. So it's all lining up to have a little exhaustion sell-off. Might not necessarily be as big as some people are expecting. I think the end of month flows could just help put in the next up leg. There is a decent sell-off ahead, but I don't think we're quite there yet. But I'll show you that in a minute. Um, yes, I'll run through. Obviously, Nvidia being becoming the highest weight and the biggest weight in the tech ETF, it's going to have an undue effect at the start of the week, as a lot of those bids just disappear that had to be done going. And what you tend to see happen with market makers is that when you've got events like that, you try and position, and a lot of funds do the same thing. They know that it's going to get overbid, so they tend to go underweight, or they end up, or if you're the market maker, you end up selling the end of the orders into that final print of the reweight. And Nvidia was actually a little bit weak, wasn't it? But all up into that final few days, people tend to do it as an average. I'm pretty sure people will have left themselves short, and that gives you 2 things. One, you benefit as the demand disappears. It also means you can sit there and pick it up, make a nice turn, and be doing your job, supporting the market. There'll be a lot of that going on, and it's sort of when I was doing this earlier in the day, I suggest we're looking for one more small catch up. We've had what's probably the third wave with a consolidating 4 subwave, and then we just need a little more high to put in potential top 1. I'm expecting some kind of consolidation over the next couple of days, but at any point, we're gonna break out into the end of the month, I think. It's not necessarily time sensitive, but it's more or less suggesting that it's gonna happen into the flows at the end of the week. So unless this becomes a protracted wave 2 that takes us into July, and then we get the breakout, but I think we can pay to wait for the extremes at the start of this week. Downside should be pretty limited because this initial surge up in the Dow, again, has the look and feel of potential leading diagonal. It's not got a lot of impulse. Can be It's a moot point as to where we put the overlap there, whether the 2's there or here. But either way, it's been pretty it's not been that impulsive yet as a breakout. The S&P 500, that's obviously seen a bit of that tech nonsense sell-off. We're probably started the third leg down of this consolidation here. We've had the spurt down. Looks like we've had an up, down, up, and then in here we're nesting. So that's suggesting to me we've got another equal leg down somewhere into this lower half of the trend channel before we move up. What I'm talking about earlier is I wanna see an impulsive super exhaustion that takes us over and challenges the upper trend level of trend channel of this move that has worked perfectly all the way up. So that's kind of fitting the narrative to suggesting that there will be breakout in the either at the start of the month or into the end of this week. And then we've got a decent sell-off coming, sort of anything like a 5%er. Nasdaq again, and I've put that one in, I think. So again, in the Nasdaq's we're in a wave 4 of 5 here, but we're in the crossover of the blue channel and the current 5 minor waves. That very much looks like we are doing a 3-wave consolidation of which we put a 1, an A in. We've done a tiny degree 3-wave there. We're nesting and working our way down to what hopefully is an equal legs, which just happens on Thursday night, Friday, to meet the lower end of the trend channel, which we have been living by quite accurately so far. So don't rule out an extra bit of weakness in Nasdaq, which would take it back, what, about 300, 400 points? 1.5 to 2% wouldn't that wouldn't be unreasonable with the backdrop we've got. And then what becomes quite an important fifth leg of a 5, of a 3, and then we go into some sell-off. So this all could be about putting in a July high before we get the shenanigans of um, August, the September. So what will happen there? Yeah, it's highly likely we get disappointment of not having a July rate cut, moving it into September, which is where the bias is at the moment. We're still in that June to August net direction of travel is up. So where's the start of June? So we've got plenty of space, 18,200. We can easily have the overthrow, have a decent pullback, which tends to come back, as we said previously, to the wave 4 of lower degrees. So anywhere for the pullback of that, anywhere from this red 4 and the minute wave 4 over here. But this itself will be a wave 4. So you'll be looking for a 38 fib pullback of the move from so basically 17,000 to 20.5, and we're going to take so that's 3.5. We want 40% of that. So that is 1,400 probably off that. So we'd come back to probably 19,000. That would be a reasonable sell, and even if it stopped there, would still be net up for June. And we said 7.5% is tends to be the performance, doesn't it, for the US indices in that period? So that would be 3/4 of that. So about 1,400 from there, 19,600. So yeah, so it's all in that kind of ballpark to still be in line with overall presidential 4th-year trends. Anyone that's astute out there will see the numbers, which all fits with 3, 4, 5, 3, 4, 5, heaven, etc., etc. So Nasdaq has been playing out a bit like gold, it's been quite a good Elliott wave follower. We haven't had to change much for months in terms of how it's been playing out to big fib extensions. So we'll keep on it until it breaks. Any questions from anyone out there? Are you still with me? I know the US is open, so obviously you're quite busy trading, I'm sure. So say feels like we've got a little bit of consolidation potentially to come. Won't be very deep. So we're only talking 1 to 2% max, and then a breakout is my suggestion, I think, once it all settles down. What's my favorite instrument to trade? My own trumpet. Da-dum, shh. I like trading gold, but it is difficult. I like trading uh, Nasdaq. I've tended to trade those most. Then I'll mess around with individual stocks. Sometimes play FTSE, sometimes play DAX. But I say a lot of my trading I don't necessarily do on the platforms that you're trading on. You got the biggest part of my money is in UK time space, so I have to be careful how I play a lot of the time because I can't trade between the out of hours, and I often play some of the leverage instruments. I need to make sure that I am definitely happy with what I'm doing, or it can get expensive. So we'll have a quick look. So what would that be? Effectively futures really is what I'm trading. We've got alpha futures coming up in a couple of weeks. You'll see more and more from Ben and a few videos that I'm on, but we'll start doubling up using both chats going forward for anyone that is interested in the fundamental side of things and the technical fundamentals, if you know what I mean, about some of these instruments starts to become important. It will be a daily close on that, so you won't have to worry about the time series and calendar spreads, et cetera, but they will be affected intraday by things going on in other instruments. So we'll have to know get involved in all the technicals, the backwardations and contangos, just to know what's going on. Um, looking at yeah, let's have a look at the dollar and the yen. So to me, the dollar, as I said, it's still eking out um, the move up to finish off the wave two. It's been very frustrating. We've had this nesting going on for weeks. We keep talking about it. Just every time we're just about there, and we've got collapse conditions. Something miraculously turns up, normally with the Fed's mitts all over it, to just to just to keep us clean and the dollar supported. So rather than this just be, we've been looking at them as double extensions all the time. This one still at the moment is valid as the actual 5 waves, and we know it doesn't really matter what happens in this 5th wave here, the micro 5th wave, the black ones, because the middle wave, the 3 that we've got posted is the longest. So far, well, it's longer than the wave 1. So what it means is it can't be the shortest. So we're quite happy to play this out unless this current low gets taken out. At the moment, it is trading out quite nicely with the 5 waves up to a 1. We're into some form of consolidation, but I think we're gonna be choppy the first part of the week just to finally put this in. We've said there's a number of confluences around here. 106.2 area, potentially for it to finish maybe a tad higher. This is on the ICE data. I'm 15 minutes delayed on that, I think, but we're looking at this just mainly for historical concepts, and that fits with maybe one more kind of grinding out, churning out low in the euro, although there are other things at play in the euro. As we know, it's not a one for one at the moment. And the US dollar index is influenced by the UJ flows as well, short term. So we were looking at it on Friday, slight difference in shape to the wave 2 and 4 way down here to an extent that because we've not put a new low in yet, feels like we're still grinding down to make a fifth wave. That just failed. So the two wave was quite an extreme zigzag there, and we've had flat mainly here. Different shapes. One's wider and less deep, and that one's short and higher. That's the alternation. That tells you that they're normally consolidation waves in the same pattern. So here we're going to be eking out 5 waves again for the C wave to finish this off. And that sits rather neatly, looks almost the opposite of the setup we got for the dollar, doesn't it? So let's presume that's going to play out. 106 probably holds, but that's subject to how the political environment plays out in the next few days. And then, like I said, maybe a little rally into the weekend, dollar weakness, inspiring it, a little bit of to and froing. Let's see how the result looks. It might be a little bit more mixed than we were expecting. Good. So we seem to be on the same page, Pav, and I do like that. Not many people are, so I'm quite surprised. Um, so UJ, as a result, again, just looking at how this has been moving its way up. The first, like I said on Friday, this could be at the. These are labels that you use either right at the low of um, a structure or they're right at the higher degree. We'll leave them. They're quite large in size. I started off at the higher degree just because of what was going on. So these are intermediate waves and minor waves below them. We're dealing with the blues. The blues and the reds here are the important ones. The premise is the same. We had a leading diagonal up for that intermediate one. We put in a 3 wave 2. So we're in the middle and close to the end of the intermediate 3. Now we said that these things were going to be quite churny because we're all around where big options volumes have been previously, and also the intervention levels where they've actually come in, and we know they've come in around here 159, 160. You can see that we had that little break up. Did we actually touch 160 today? Just shy of it, weren't we? 159, 928, and then we came off. So that's all. That looks like it could be a valid 3 wave already down to that 4. We may just be gonna end up putting in some kind of sideways consolidation before we go again, but we're in the latter stages of it. And again, we're looking at the positioning to become right now the longest or not to become not the shortest as a third wave. We need to get up to up here, which is 160, spot 172. It's highly likely we do have a breakout at some point that hits that. But by the nature of it, as long as the third isn't the shortest, we could very much be in here for a short fifth wave, which, as I said, this is a weak version, valid fourth wave in here. We could easily, the next higher high could be the end of this move. Then we're back into consolidation territory. But as I said, it looks like we always were set up in the long-term time frame to try and finish this towards the top end of the trend channel. And that at the moment is suggesting sort of 165.6. Maybe. We've got a lot of data on inflation this week in Japan. Tokyo CPI, which is the most important, with some other costings and CPI indices around it, industrial production, any kind of weakness, and we're gonna start seeing that, um, see the speculators come in and have another go at it. All depends. So this again sits with a bit of data nonsense over the week, and then potentially having a go at the upside before this consolidation we're looking at ahead being the one where the dollar's starting to sell off. But I'm open to, as you said, we could easily have redraw this and have the third wave there and the fifth wave there, in which case we could be more advanced in the pullback. All depends on what the Ministry of Finance want to do. At the moment, it's a bit of a double bluff. Bye, Vivi. Thanks for coming on. So yeah, UJ, there's every potential that because showed there, the relative move between the first wave down and the next one is quite big, then you would expect it to be part of something else that is gonna progress and maybe be a deeper zigzag, in which case we might be a little bit further advanced in the move. But again, all depends on what happens in the data. We just need to be aware of that. Is there a chance that the data comes in really hawkish? Potentially, but it has been just bobbing along. We have had the last CPI print did confirm it, didn't it? They said as long as it becomes embedded above 2%, then the rate hikes are coming. They've got a July meeting where they're gonna spell out things a lot more. It's all about what happens getting into that meeting. So my first instinct is that we're gonna be bobbing around this 160 level just until we've got something that says no. I think if we do get weak data from the States at the end of the week like we're anticipating, then that could be the next incentive to sell off. So if anything, as it approaches up here, you can start having stop loss sells with the current high, knowing that they're probably gonna intervene and looking for it to come and hit this trend channel, maybe have a small overflow. So the bias is net down in the short term, despite the fact we've got higher labeling in there, just from the way that structure is gonna be. So you're probably gonna have a bounce within this, whether it's part of the next wave up or whether it's just consolidating the first move down. Once that comes in, then we can start playing it with a stop loss. At the moment, we're kind of mid. It's a coin toss. So we've been playing the Nikkei again. We were advising getting in here. You've had a number of chances on the pullback. It's in a nesting formation, hasn't taken out any of the wave two lows yet. It just seems to be hiding around small churning. It's going sideways because the suggestions that some of the overseas flows have been coming out, but they are finding possibly money that's returning home, and we're going sideways before this eventually turns into a breakout. Again, this low down here, 37,900 is the important one. That's the hold. If we go into consolidation phase in the next couple of days, we should really hold in here. This pattern might get redrawn, but this one should hold or just become a double extension. So I'd imagine in the way that we're set up, we should still be in these early nests, early part of the nest at least. It may just redraw slightly, but unless something materially changes, we'd be looking to buy the yen down here because sooner or later this is gonna become a serious set of threes breaking out. My old friend, the DAX, a lot of people play it. Again, we've had the same structure, leading diagonal, we've put in consolidation. We haven't broken that yet, so it looks like we are grinding higher. It's just about which subwaves are in and where that all starts ending. So we may redraw this as being a bit, maybe an extending fifth wave, or it may be we're breaking into a sub third wave here. But we've got a higher high for the move from the low. So for now, until that low here at 18,100 breaks, then we're still in a nesting situation or impulsive breakout. Again, I don't really want to commit to buying the indices yet until we just get through a couple of days this week. I just want to see how the US reacts. But they're all very much in a similar pattern of either moving up or consolidating previous moves. We haven't necessarily gone into full-blown 5-wave ending patterns yet. This one is part of it. You can see here, this is all part of an overthrow consolidation wave that is building its way back into the blue channel. It all fits with the overall idea of Q2 into Q3. Remember the June, August, we've talked about it earlier, the presidential cycle. We're in the end of month. Often, just like we had uh, triple witching day, the ends of quarter, ends of halves overlapping that you get in June is obviously a very important juncture. We've talked about hedge funds de-risking both sides into the June expiry. Well, that counts for they may have done all their work already, but there may still be some tidying up to do into the end of half one. So expect some choppy flow. It's just what happens. A lot of stuff starts to look confusing at the end of quarters, and equally, there's a big incentive for people to put in a high finish if they can, just on the basis that we're in a log normal industry where upside is generally the payer of most people. So there is a reason to try and finish the indexes at the higher the levels they can at the end of the quarters and halves. We'll find out whether there's anybody brave enough to take them on. FTSE again, that has held up nicely while the US was consolidating. There's real worries that we get into my buy zone. Feels like it's never going to happen again. So we have to realistically think at the moment 8,100 is seemingly holding. And again, we've got a valid one consolidation, what looks like a three-way, a third wave consolidation, and then we've got a valid 5 waves in here. So that anywhere around here, we could have put in this first minute wave up. We'll be looking for that to consolidate into this sort of area here. There's a wave 2, 61.8 is your first choice. That's 8,186, so 1.5% from here. And then we should be into the third wave of this -5. So that should be a reasonable breakout along with some of the others into long-term trend channels. We'll have a look at that trend channel on Friday. So any questions? You've all been quiet for the last 20 minutes. I presume you're all trading away. VIX and Move, they're telling you it's not panic time at the moment. That's just mid-trading range. Really moved. Bonds were getting a little bit worried into the week last week. A lot of that stress has come off the US side. You're looking at your cable position. I do apologize. I've been so busy doing a note on an UK AI play, which I'll talk about when it comes back to market. But, that's very interesting, but that's taken up a lot of my time, so I didn't get a chance to do a lot of work on sterling. I said I would, but I'll let you down. Definitely Friday. So I haven't updated my GU for a while. Yeah, so I remember looking at that previously. So that pullback into the end of May was right verging on being impulsive, wasn't it? 1.618 on the third leg. So that wasn't the end. I told you got something else going on. So this may even be an expanded flat. So the two might be over here. Have we had a fifth wave? Even better. So potentially there is a one consolidation, a third, a four. So there's a potential fifth wave to finish that three wave down there. So that does look like that could be an expanded flat on GU. In which case we're back into a strong zone, aren't we? So sorry, Pav, you were doing what did you do? You did what do I think of Kavana? What's Kavana? Okay, I'll have a look at that in a bit. So again, if this is a valid wave 2 end and we're in 3, we've just put in potential sub 5 waves there if you look at that. If that's the case, we know we've got 3 back and then at least another 5 up before, even if that's just another consolidation wave. So yeah, it's very short term. I'd expect to see a little bit of pullback in GU, but again, that is your very obvious line in the sand. So you've bought this all the way up and now you've just shorted it, have you? Okay, so I said I think at the moment that's likely to hold. So a little bit of, but obviously that tells us whether the pattern's finished or not, because this could easily be 1, 2, 3, 4, and then 5 to a new low. This is just a valid potential position right here. So everything needs to take into context the recent lower low. So first instinct is we're looking for a 3 wave that holds that low, that then does at least a double before it sells off. But like I said, I've not really been following this one much. I'll have the I wanna have a look at sterling because a lot of you are asking about it, and we'll get back on top of it. Dollar strength in the short term for the week, we're expecting, so yeah, we could see that little sell-off or even a continued sell-off. And then we're talking breakout at the end of the week. So yeah, so this could be very complicated. Yeah, I wanna go away and have a look at that because I've not looked at it for a few weeks. I just wanna make sure I haven't got to redraw further down the chart. But yeah, thank you for your input there. That looks very interesting. Anyone else got anything that they're looking at? So you're looking down here, 24.98. In fact, let's just if I was coming to this fresh, just ignoring that and go to the latest wave, let's say that is just a consolidation wave. So yeah, so if we are in a consolidation still, then equal legs is 125.34, and you obviously it can go beyond that. One spot 236, that's a common C wave, so 124.86. So where are you retracing from? I'll tell you what, Pav, if you could, if you wouldn't mind, just drawing up what your current setup is and putting it onto my chat, it'd be a good one to have a look at. Okay, so this low we had over here. Yeah. which is why instantly looking at this is why I need to redraw it because it's all over the place. So yeah, yeah, okay. So you're in that ballpark. Yeah. So this looks like it finished with an overlapping ending diagonal, didn't it? So that there was the three, and the five. Yeah. No. Cool. Like that. Good real time update for me. Thank you very much. I like that. I'll go back and recount all that and confirm it for you. So that would be a neater setup. So again, what I like to do, which is useful once you've done your regression, the retracement that you've set in from the 1, 2, then within that substructure, you do the extensions, looking to see where the equal legs is. So anywhere between 1 and 1.618. C leg of an ABC, generally 1.236 you're hoping for. So it's all in there. And have you got the confluence? So it sits around that same sort of zone. You start to get confident that is a reasonable target. Yeah, so it looks like I wouldn't put you off what you've got on there as things stand. Anything else from anybody, any other stocks or any fundamentals that you've seen or want to think or you're thinking about for the week? If not, I hope you found that useful. I'm gonna drag myself back. First chance to look at the markets today, and once I get at some incoming. All quiet on the chat front, so yeah, I can actually have my first spell look at the markets today other than this. So good luck for the week. Hopefully, you've got your own ideas and you're gonna play it nice and safely, but I think we've still got this political unwind to sort out, and then hopefully we've got an end of month, end of quarter, end of half, PCE inspired rally, and if you're playing gold, hopefully that's got some crazy buyers attached too. So good luck with however you're playing it, and we'll speak soon. Thank you, Pav. Thank you, Charlie Kendall. Thank you, VDK. Thanks for all your input, and we'll speak soon.